Hello, everybody, and welcome back to episode 17 of my investment journey. Got confused there for a second. So as always, I want to make my trade first, and then let's talk about what happened in the markets. So we'll go right ahead and invest into the MSCI emerging markets. And we have the 1,000 euros as always. I'm going to review the order. Looks good. Let's buy. And bam, yeah. Perfect, it worked. So let's go to the wealth tab to see what's going on. And yeah, fantastic. We're up to 18,000, almost 700 euros. And that is week 17. So we are up 1,700 euros, basically 10% of what I invested. And yeah, what can I say? Especially last week was a pretty strong one. Over that week alone, it's almost 300 euros. And over the month, it's 800 euros. So yeah, fantastic results. So yeah, let's see what happened in the markets. Overall, a very strong week for both the MSCI World and the MSCI Emerging Markets. Once again, the MSCI Emerging Markets beat the MSCI World, so emerging markets dominate. And year to date, we are ending February now. It's the last trade that I'm going to make in February. We're up 11.5% in 2 months. I mean, if we extrapolate this to the end of the year, we're going to end at plus 70% or something. So that's completely unrealistic. Anyways, but I'm super happy with how it turned out so far. And I can only hope that it continues, right? So what I want to talk about this week is why India is doing so badly. It's the only country that we have here that's down year to date. Other than that, I don't think there was too much crazy news. One thing that happened was that NVIDIA published their fourth quarter earnings, and it once again showed how crazy the market is right now. So NVIDIA stocks fall as Q4 beat, guidance fail to satisfy Wall Street. So let's disentangle that. Okay, so NVIDIA stocks fell more than 5% on Thursday as Wall Street tried to square the company's strong Q4 earnings and Q1 outlook with the broader anxiety surrounding the AI trade. So the fourth quarter figures were earnings per share of $1.62. Okay, and that's above the expectation of Wall Street, which was 1.53. So they're better than expected. Same goes for revenue. At the same time, the company put out a guidance between $76 and $79 billion in revenues, and that's also above what markets expected with 72 or 73 billion. So what's going on here? I think it's just a reflection of the insane times we're in, where some say it's a bubble, some say it's not, and where things just seem irrational. I mean, can anyone remember a time when a company beat all expectations and then was still punished? I mean, that makes no sense. So here are some voices from the market. The disconnect between NVIDIA's recent announcement and its stock performance comes down to whether investors believe the AI trade is nearing an end. Okay? And here an asset manager is saying the real debate is what growth looks like in 2027 and 2028. Investors have to decide what inning of the AI build-out we're in. So a baseball analogy. If it's the fifth inning, so we're in the middle of the game, then 2027 growth should look more modest, so we're slowing down. But if it's the second inning, so we're at the start of the game, then growth outlook over the next several years remains robust. So I think that was just one interesting thing that I wanted to touch upon, which is getting everybody anxious. Okay, now let's get back to the main topic of the week, which is India's underperformance. Now, the first reason why India isn't doing so well is that the stock market was, or maybe even is, overvalued. So here you can see the PE ratio by country, and that's, I think, of the different country level MSCI indices. And way ahead is the US with about 28. Okay, and this is end of 2025. All the other countries here are lower, maybe max here 22. Now, let's go to emerging Asia Pacific, because here we have India. And so if we look at the last year or so, or let's go to December 2025, And India is way ahead of everybody else. And this is the black line up top with 26. Okay, so 26 is the PE ratio of India. And this is compared to here, all the other countries, 26. So it's the only one that's close to the US. And the US is, of course, a total outlier anyway. And so that's the first reason. An expensive stock market is typically not poised for a lot of growth. Number two is the weak rupee. So here we have the exchange rate of the Indian rupee against the United States dollar. And you can see that this went down over the last year by 5%. So if a US investor had invested into an Indian stock and had gained 5%, all of that would have been wiped out by the deterioration of the exchange rate. And this is all the more negative considering that the US dollar had a terrible year. I mean, against the euro, all of that looks even worse. I mean, the dollar lost a lot against the euro, for example, or the Swiss franc. And a weak dollar is typically a buying signal for emerging markets. But the rupee was even weaker, and so India couldn't even benefit from this weakness of the dollar. The third reason is that earnings growth is low. So if you have a lot of earnings growth, even high valuation multiples, like here, can be justified. But India's earnings growth has been the lowest it has been in 5 years. Here we see that the earnings grew only 1.3% year on year. So we're talking about the earnings per share. So if you have weak earnings on top of everything else, then it doesn't help you either. Number 4, trade tensions. So India had a lot of trade disputes with the United States. Just now, the US reduced the tariffs on Indian goods from 50 to 18%, but there are some things that remain unclear. But 50%, imagine that. And Indian exporters had to deal with this since August. And the duties on India also included a penalty for buying Russian oil. So now at least the tariffs went down, or there's a trade deal, and that's at least something positive. And the last thing I wanted to talk about was AI, because AI dominates our headlines all the time. Is India winning or is India losing in the AI race? And to be honest, up until the end, I couldn't make up my mind. I read some things here or there. I saw some good stuff, some not so good stuff. Yeah, and some of them, India is doing great. Okay, education, talent pool, that's amazing. But regardless, the only conclusion I could come to with my admittedly very low resolution view is that I don't know an Indian champion in AI. Okay, none of those hyperscalers. And as we saw in other videos, the infrastructure companies, they're winning. So NVIDIA, TSMC, they're the ones winning. Who's losing? Well, especially software companies. So those that are supposedly being replaced by AI. And so I think India has a lot of software companies that might be suffering here, and none of the infrastructure players. But I could be totally wrong. I was looking at the sector performance here of Indian stocks. I mean, lots of sectors aren't doing so well, but on the 3-month performance ranking here, you can see technology services are the worst of the worst. And so, yeah, maybe that's the case. They are kind of tech oriented, but not AI oriented. And so they've only been punished here. Another thing that could happen, but this is maybe a totally dumb take, is that India is kind of like the shared service center of the world. So think of call centers, think of IT services, and these are things that, at least in my mind, could fall victim to AI. So that could be another thing that is hurting India. But anyway, maybe now is the perfect time to buy because, as you know, you want to be fearful when others are greedy and greedy when others are fearful, as the famous Warren Buffett saying goes. And yeah, maybe a lot of this negative stuff is already priced in, and now India's stock market is poised to go to the moon. So yeah, that's my view, and no prediction as to what's going to happen. Only time will tell. And if you don't want to miss anything, follow me, like and subscribe. I see you next week.